Good afternoon and welcome to another edition of the COVID-19 Power Lunch series. My name is Stacy Joyner and I am a partner with James Moore & Company. Today I'm joined by Rebeca Denahan, Director in our Accounting and Controllership Services Department. And Rebeca is our firm's payroll tax leader, and she's going to walk us through today the Employer Retention Tax Credit and how businesses can take advantage of this credit. So Rebeca, we'll jump right in. Tell us what the Employee Retention Credit is.
Well, first, thank you for having me, Stacy. So let's talk a little bit about the Employee Retention Credit. This is just a fully refundable tax credit that's available to eligible employers that allows them to obtain a payroll tax credit for retaining employees during the pandemic. The first one was passed through the CARES Act on March 27th, 2020. And since then, we've seen some changes in eligibility that I'm sure we will be discussing soon.
Great. So what period of time is the Employee Retention Credit available for employers?
Originally, the credit became available for wages paid starting on March 13th, 2020 through December 31st, 2020. But as I mentioned before, there have been a few changes that have extended this credit through the end of 2021 as well.
Now, are all employers eligible, or are there any that are not eligible?
Well, for the most part, businesses that have W-2 employees are eligible, and this includes nonprofits. However, this varies depending on the year in which we're looking at. For 2020, there's guidelines that limit the eligibility by excluding state and local governments and small businesses who had taken the PPP loan. That since has changed. And that exclusion was repealed, meaning now the people who actually got PPP loans are now eligible.
So maybe we should go over 2020 first and talk about what they need to do if businesses determine that they're eligible for the 2020 credit and how they go about getting that. So where would they start? How would a business determine if they are eligible for the credit on 2020 wages?
Yeah, so the easiest way to look at this is there's two main criteria. So the first one refers to whether or not a business was fully or partially suspended due to a governmental order. We do need to keep in mind that, this order must have been from a local, state, or federal government, that has certain jurisdiction over the employer's operations. This would not be true for a business, for example, if your offices were closed, however, you were able to continue with your operations through working from home, or your employer, you had alternative ways of operating. In that case, you would not be considered fully or partially closed. So a good way to think about this would be think about restaurants and bars where they actually had to shut down, here in Florida and across different states. The second criterion would be taking a look at the business's gross receipts. So you can take, for example, if we're thinking of 2020, we would compare the quarter that we're looking at 2020 to the same quarter in 2019 and determine whether or not we had a decline in the gross receipts at that point. So for example, for 2020, if the decline is more than 50%, then that qualifies you for the credit. It's a little bit different in 2021, and we'll discuss that later on. One thing that it's important to emphasize is that the business is only required to meet one of those two criteria, so you don't have to meet both. So if you experience a closure, you're eligible, or if you determine that you had a significant decline in your gross receipts, that also makes you eligible.
Okay, so for the suspension, so is it correct that, say, like, an essential business, say like a auto repair shop, if they voluntarily closed because they weren't seeing, customers on a daily basis like they typically would, but by government order they could remain open, they just chose not to, that wouldn't qualify as a suspension, correct? Because they were not required to close. Okay,
That's correct.
Sure that was clear. Perfect. So let's say that they've determined they're eligible under one of those two criteria. What payroll costs would qualify for the credit?
So it's 100% of the wages, in addition to some healthcare costs. So for employers with fewer than 100%, than 100 employees, excuse me, any wages plus those insurance costs would apply. For employers that have more than 100 employees, only the wages paid to employees who are not performing services, then you can only count wages up to the amount that that employee would have received, taken into consideration 30 days immediately prior to the period of that economic hardship. So there is that 100 employee limit there. So if you have in 2020, if you have more than 100 employees, then think the rules are a little bit different. But in short, is pretty much all the wages that you have paid in addition to some of those healthcare costs.
And correct me if I'm wrong on this, but I think I read that let's say somebody's hours were cut, so they only were required to come in, say, half-time, but they continued to get paid full-time. That excess amount where they weren't working but getting paid, that would qualify for the credit, correct? Okay.
That's correct, yes.
Now, is this credit unlimited, or is there a maximum to the credit?
Well, I mean, there sure is there is a maximum, and for 2020, the credit is 50% of the qualified wages, up to $10,000 in wages, and this is annual. This is an annual number per employee. So if you have an employee that you paid the $10,000, then your credit would be $5,000 for that one employee per year. However many employees you have.
Okay. Now, what if I heard you mention that the PPP loan made some people ineligible at first, but they changed that. So what does a business do if they took a PPP loan in 2020?
Yeah. As we talked, this was a big revision of the employee retention credit from the original version. So on December 27th, they actually made it available to those people who took the PPP loan, and you can go back retroactively and change your payroll tax returns to go back and claim the credit. The one thing that you have to keep in mind is that, when it comes to the forgiveness of your PPP loan, you want to make sure that you don't, what we call, double dip on those wages. So if you take the period of your PPP loan that you're going to apply for forgiveness, the wages on that period cannot be used as well for the employee retention credit. So you want to make sure that you segregate those two so that you're not double counting those. That's not allowed.
Okay. So if they've already applied for their PPP forgiveness using wages from 2020, is it worth even trying, or what should they do?
Well, I think you need to take a look also the period in question, of course. I do think it's worth trying if you know for a fact that you have excess payroll wages. Sometimes what you can do is, the PPP loan allows for other costs, but if you've already applied for the forgiveness, taken into consideration all of the wages that you pay that you have available, where there's not really much that you can do at that point, but you can certainly, if you have any wages that would qualify for the employee retention credit outside of the PPP loan period of forgiveness, then it's absolutely worth it to go back and try to claim that credit.
And I guess then if they haven't applied for PPP forgiveness yet, potentially they have some opportunities to kind of look at what's most beneficial for both and try to, take advantage to the extent possible of both programs. So
correct.
I know a lot of businesses rushed out, were eager to get their forgiveness, and so they may have already taken care of that. But for those that haven't, perhaps they have a little bit of flexibility.
Yeah, I think this offers a different strategy for sure. When you're trying to figure out your forgiveness, initially it was, the mentality that we can have, if we have all the payroll costs available to cover the forgiveness of the loan, that would make sense. But now, since this employee retention credit has been backdated basically to 2020, you may want to reconsider the makeup of those costs for your PPP loan so that you can then maximize both options.
Right. Yeah, for sure. Okay, so let's say there's a business that determines they are eligible for the employee retention credit in 2020. They didn't claim it, and they want to go back and claim it now. What should they do?
You can go back and you can amend your 941 returns through a 941X form. It has the fields that you need in order to be able to report the employee retention credit. And you would follow the same due dates basically as a 941X, but I believe, Stacy, correct me if I'm wrong, but I believe that you can go back 3 years. So you have 3 years from the end of the quarter that you're reporting.
Yes, that should be correct. And I guess it's also good to mention that even if you don't do your own payroll returns, you should talk to your payroll provider, or even if you're on a PEO and you're eligible for the credit, there should be an avenue for you to get it. You just need to work with the parties involved to make sure that everybody's on the same page.
Mm-hmm.
Okay, so let's jump into 2021, Rebecca, because we've just finished off the first quarter of the year, and I know there's some, time is of the essence here to take some of these credits in this first quarter, 941. So what would a business need to do now for 2021 to determine if they're eligible for the credit for Q1?
So for 2021, the eligibility follows the same two requirements that we discussed before, where you experience partial full closure due to a governmental order, or you also experienced the reduction in your gross receipts. The difference here is that it's not a 50% decline anymore. Now it's 20% decline. So it opens up more opportunity for businesses. You would still compare to a quarter, if we're looking at quarter one, for example, speaking of 2021, you would still compare it to quarter one of 2019. So yeah, keep in mind, we would still be using 2019 and determine if there was a decline then. Now, there could be some businesses out there that were not in existence in 2019. So in that case, you are allowed to compare to a quarter in 2020. But something else to mention here is that the Consolidated Appropriations Act included also public colleges and universities, government healthcare providers and hospitals, and I think they also included some federal institutions such as credit unions. And then the American Rescue Act Plan of 2021 expanded this to recovery startup businesses and severely financially distressed employers as well. So in essence, follows the same process as 2020. The only difference is that percentage in reduction, that it's now making this credit available to many more businesses.
Now, once they've determined they're eligible, say they have the 20% decline compared to quarter one of 2019, which I'll just add, that's really kind of nice that they are letting them compare to 2019 and not 2020, because in theory, 2020 was already a down year. It would be hard to go down again from that. So,
Right.
So that's kind of neat. So is there any difference in what payroll costs qualify, or is it still wages and certain healthcare costs?
So it, again, similar, right? It follows the same, in essence, the same guideline, but the only difference is that that delineation of the 100 employees that we had talked about before, now that has been increased to 500 employees. So if you have 500 employees or less, then all the wages that you paid are eligible, in addition to some insurance cost as well. Yeah,
Perfect. Well, that opens it up to a lot more employers, so that's nice.
Yeah.
Now, is there the same max credit? Is it still $10,000 a year, or is it something different this year?
The biggest difference for 2021 when it comes to the actual amount of the credit is that the percentage was increased to 70%. So in 2020, you can claim 50% of the $10,000 per year. But in 2021, you can claim 70% up to $10,000 per quarter. So now you can claim that credit more every quarter. So for each employee, you can get the $7,000 per quarter. So 2020, we saw it for the whole year. In 2021, we have this credit available for each quarter and up to 70%, not to the 50% that we saw in 2020.
Wow. Okay, that's a big change.
It is.
So let's say the business has taken the second round of PPP and taken out another PPP loan in 2021, what do they need to look out for there?
Same concept. You just have to make sure that you're not using the same wages to apply for that forgiveness. So it gets a little bit complicated, honestly, to keep track of these things, because you want to make sure that you know that you're looking at the periods that you're taking into consideration. If you're going to take a credit for quarter one, you want to make sure that you're careful whether quarter one will be a part of the period that you'll need for your PPP loan forgiveness. So it definitely gets businesses to really think about how they're going to approach that forgiveness. And I always recommend, obviously, that you talk to your payroll company or your CPA firm and get some assistance on this.
Sure. Yeah, it's definitely nice to have the rules in place before we go into programs this year, as opposed to last year when it was kind of like, okay, here's a program and it's applicable now. So figure it out. So yeah, sounds like they've got a lot of,
we have to go back and rethink 2020.
Right. Got some flexibility, even more flexibility to kind of be proactive in planning how they want to use their wages and where they get the most bang for their buck.
Right.
Now, what does a business need to do now to basically prepare to take this credit on their 941 filing, which is going to be due now here at the end of April?
So this is key, because if we have businesses that we're not necessarily the most timely in keeping our financial data up to date, this will be very important, because the sooner you close your quarter one numbers, you can take a look at your gross receipts and determine whether or not you can apply for them. Because, you know, we got to keep in mind the quarter ends fairly quickly, and then we have to report all the payroll taxes returned by the end of April. So you don't have much time between closing your financials for the first quarter and then when you have to claim this credit. So keeping financial data up to date is very important. You want to make sure that you determine the amount of the credit so that it can be reported on the 941, and take into consideration whether or not you're going to have to do this in the following quarter so that you can act proactively.
So if they calculate a credit and they put it on their 941, I think you mentioned this, but it goes against their employer share of Social Security tax. Is that right?
Correct.
Okay. And if it exceeds that, do they get the excess back as a refund?
They do. Mm-hmm.
Okay.
You would be getting that money back. If you are thinking about following quarters, for example, and you know that the credit will exceed the amount of the liability that you owe on payroll taxes, you can actually request an advance through the form 7200, which is the form is called Advanced Payment of Employer Credit Due to COVID-19. So you can fill out this form and file it for the quarter in question. That way you receive that money as an advance.
Now, one other thing I read, and this is related but not to this exact topic, if the owners are employed by the business, I think I read that if your ownership exceeds 50%, then your wages as an owner, those wouldn't count. Is that right?
That's correct.
Okay.
Mm-hmm.
And then if you have any family members in the business, working in the business, you couldn't include their wages either, right?
That's correct. Yeah, that's something to keep in mind. I'm glad you brought that up, because sometimes, you know, when they say all wages, that's kind of what we want to do. We want to include all wages, but definitely the percentage of ownership has an effect on your credit. So you want to make sure that you exclude those. And as you mentioned, family members will also not be included on those qualified wages.
Okay. So in theory, if you have a small business that's kind of family run and without any unrelated employees, you probably don't need to spend too much time on this, because your owner wages and their family member wages wouldn't count.
That's correct. Yeah.
Okay.
You probably want to strategize otherwise, maybe through your PPP loan or something like that.
Yeah, for sure. Okay, so I know there's the other payroll credit out there for the Family First Act, which provided the credit for COVID pay and sick leave pay. If the business is claiming that credit, can they also get this employee retention credit?
No, they cannot. So it follows the same concept. That's with the PPP loan. we cannot use the same wages for the same period for different credits. So each
Okay.
of these credits will be treated separately, and they should have their own basis of wages that goes against them.
Okay. So let me see if I can clarify. So you can get both credits, you just can't use the same wages for both credits.
That's correct. If you
Okay.
have different periods, then you're fine.
Okay.
Just you can count, the same period for the same two different credits.
How do they treat this on their business income tax return when they file like their S corp or their partnership tax return?
So the amount of the credit would basically decrease the deductible amount for wage expenses. So depending, whatever your expenses for the year, you would then reduce that by the amount that you received as a credit.
Okay. That makes sense, because if you're getting a credit against those wages, that would again kind of be double dipping if you were deducting
Correct.
those wages.
And that's really what it boils down to, is that you have to just keep in mind that, there's no double dipping going on anywhere. So
Right.
you want to make sure that you understand what wages you're using for what credit, and to keep those, organized.
Gotcha. Is there any impact to the employees on this? Like, does the credit impact their payroll at all, or their W-2 or anything?
No, not really. This is for employer cost purposes only. I guess the only thing that we might have seen on the W-2s for the employees, there was informational statements provided if they received COVID wages or anything like that related to COVID-19 CARES Act or anything. That would be probably stated on their W-2, which was done for 2020. But as far as the employee retention credit, no, there would be nothing that would affect the employee itself.
Okay, so Rebecca, for 2021, is the Q1 rules, do those apply for the rest of the year, or are there any other changes later in 2021 to be on the lookout for?
Yeah, so 2021, we have to treat almost in two groups. So you have Q1 and Q2, which follows the same 70% that we spoke about credits. However, the main difference between the Q1 and Q2 versus Q3 and Q4 is what is the credit applicable to. So the first two are for Social Security costs, the employer side of the Social Security. However, on Q3 and Q4, it switches to Medicare costs. So one thing to keep in mind is, because the rate is much lower, right? We're talking about 6.2% versus 1.45% on Medicare. Right. It might take a little bit longer for the company to get through that credit. So I think at that point, you want to calculate the credit ahead of time, because if your credit will be bigger in Q1 and Q2 versus the second half of the year. Right. So you may want to put that Form 7200 in play so that you can claim that credit in advance.
Yeah, that's a good point. And I guess, most companies that are getting a PPP2 loan, those are starting to roll out here. I think I've seen a lot of clients getting them in March. So they probably want to pay attention to what wages they paid in quarters or in January and February, because Correct. They might be able to get, a bigger credit in the first quarter of the year than they will later in the year after their PPP funds have been exhausted. So
that's correct.
Okay, good. And then is it correct that if you have related companies with common ownership, that you need to look at them kind of as a aggregated group and make sure that you meet the qualifications for, say, the number of FTEs or the gross receipts decline, that all of that is kind of looked at in one overall group rather than by individual company basis?
Yeah, that's actually an excellent point, because that can make the difference between what kinds of wages are eligible based on that 500 employee mark that we mentioned before. So you have to definitely look at all the companies as one, as a whole, to determine what number of employees you have, what wages are, the percentage, the maximum of your credit. So definitely, if you have related companies, you need to make sure that you look at them as one, because then, you can have a problem there miscalculating your credits and whatnot.
Gotcha. Okay. All right. Is there anything else you can think of that businesses would need to know about this credit in order to
So
prepare
the
for
only
it?
thing that I would like to add to this is, a lot of businesses these days use payroll companies or
Mhm.
PEO companies. So I think it's very important. We all get so many emails every day, right? And so a lot of the times we tend to just delete the emails. This is the time to start reading the emails from your payroll companies or your
Very
PEOs,
true.
because that's when they will be offering you guideline when it comes to how to claim certain credits, what processes they are following, what their internal deadlines are. So I think you need to reach out to your outsourced payroll companies so that you can communicate with them ahead of time, especially as Q1 comes to an end right now. If you know that you have eligibility for this credit, go ahead and call them right now and say, what do I need to do? What information do I need to send you so that this shows up on my 941 at the end of April? You have to keep in mind that payroll companies process the payroll tax returns for fairly early, the month after the end of the quarter. So make sure you are proactive in reaching out to them and understanding what information they expect to get from you so that you can claim that credit. That way you don't have to then find yourself amending a payroll tax return after the fact.
Yeah, that's a good point. I know we're all kind of in information overload right now with all of the things from all of the places, but that's a great point to make sure you're paying attention to things that are coming from your service providers to make sure you're taking advantage of everything that's applicable to you and not missing out on anything simply because you overlooked an email. So, all right, well, that was a lot of really good information. So I really appreciate your time and sharing all of that with us. So with that, I think this concludes our COVID lunch series for today. And y'all have a great weekend.
Thank you for having me, and everybody have a great day.
Thanks.